Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. Today is 15th of March, the Eids of March as they say. And it has been actually a good Friday that has happened in the world markets with the US markets rebounding smartly. And also our gift nifty is indicating that Monday might be a very good start. It's indicating that we're up 100 plus points over the weekend, so that should be good news. And there are a lot of other global things to talk about over this weekend, which might actually help the markets a bit. Though the markets, when we closed on Thursday, was looking like we are not going anywhere. We are again looking at a breakdown, but the way market has been holding up for quite some days now, in the sense like even when US markets were down 2%, our market was not going down. So perhaps that is a good indication that our markets are trying to find some sort of a support. Now Monday morning, what we will have to look out for is that if we open gap up, provided that this particular momentum that we have got from the US market holds on Monday morning as well, and Asia doesn't open gap down. So let's say if Asia is up and Gift Nifty is up, what will be interesting to see is how do we maintain this particular gap up open, and are we able to cross the crucial levels of 22,680 odd, because only once those levels are crossed can we look at some strength coming back to the markets, first of 23,200, then 23,700, then 24,200. So it's a long journey that we have to still take, if we have to reclaim somewhat the previous intermediate highs also. Forget about the top that we made in September 24. That looks like a very long time away. Possibly it's going to take much more time than that, because as I have said before, that bear cycles are not small cycles. They typically tend to last anywhere between 9 to 18 months. The last bear cycle that we saw was in September 21. Now, not many people actually know about it. I see a lot of people coming in commenting on TV that the last bear cycle was COVID. COVID was a very sharp fall, but the last bear cycle was from September 21 when we peaked to March 23, where the market did nothing. So it was a time-wise correction, and also from the peak it fell down. So from 18,000 odd it went to 15,000 something. So that was a painful period wherein all the small caps, the momentum names, etc., were completely discarded. So if you look at the valuations in March 23, the small caps, etc., were trading at PEs of 17, 18. Nifty Alpha was trading at a PE of 15. So no one was willing to touch, and from there we saw that huge rally come in small caps again, which took the index almost from, I think if I'm not wrong, from 11,000 to 18,000. So it was a very big rally that happened in all the names. So Alpha went up 2x, small caps went up, mid caps went up. So it was a big rally, and anyone who was in quality big large cap names missed out on that rally completely. Now probably the situation is slightly different as I see it. Now the tides have turned, and small cap valuations, even after correcting 25%, are still in the high 20s. Alpha valuation is in 30s. So it is not really a full blown correction that has got the valuations down a lot. Valuations have come down, but they haven't come down a lot, and still probably they are not in the same lucrative zone which they were in March 23, and that typically happens when the bear market is prolonged, not only price but time correction as well. So this bear market, the time correction is not that large. I still feel that there might be some more time correction that might be on the cards for small mid caps, etc., wherein either the earnings go up and then the PE kind of catches up with the earnings, or then there is a price correction as well, accompanied by the time, which again ensures that the PE comes down. So both the scenarios can play out, and let's see how things turn out in the markets going ahead. But this correction is only 6 months, and it is a very welcome correction, even this one, if you ask me. Though I understand that a lot of stocks have gone down 40-50% and portfolios are down, but having said that, there is some sanity which has come back to the markets. Otherwise it was just looking like a gamble in a casino, wherein you pick up any stock without any fundamental, just purely on momentum and it will go up 30-40%, and a lot of people got sucked into this margin funding and so on and so forth, and it has caused a lot of problems in a lot of portfolios. So typically this is how bull markets are. They will suck in everyone, and even till the last person comes into the market, the markets will keep rallying. And the bear markets are just the reverse. Till the last person throws in the towel and moves out, the bear markets don't reverse. So let's see where this one goes. I will take you through the markets as I see them, and then we will discuss how things are going ahead. So this is what Nifty was on the Thursday expiry. I did not make a video that day, but it was the expiry was fine. It opened somewhere over here, 23,000. Sorry, this is Bank Nifty. Just excuse me. This is the Nifty. Yeah, this is the Nifty chart. So this is also Bank Nifty. I'm so sorry about this one. Just let me correct this to Nifty 50. Yeah. So this is the Nifty 50 chart. We opened somewhere over here. This is 22,500, and we kind of were looking good, but then came the sudden fall, and we ended up at the low point of the day somewhere around 22,383. Now this was again I think the 5th consecutive Thursday week that we have closed down. So every week we have been closing down, and if you look at how the daily chart is placed for Nifty, now this is how the chart looks like. As I said, we fell down 1,000 points, we recovered 700, 800 points, and then the consolidation over here. So this is the consolidation that is happening. Some days it will go up, some day it will go down, but it will broadly be in this particular range. Now Monday, if the gap up opens, we will be somewhere over here. So we will again be touching this line that I was talking about, 22,680. This is the first resistance that we will encounter, and then this will be a key one. So somewhere around 23,000 will be a key number to watch if we go on the upside, because this is the lower high pattern. Now if we are able to break above this, then we are looking at 23,800 and then 24,200, as I had said earlier. Now these are very significant levels, but if we break down from here, then the first support is 21,700 and the last support is 21,200, which is the election day low. So this is how we are placed on a daily chart, and let's see how things play out going ahead. Now coming to how the indices behaved the other day, I will take you through over here. Yeah, this is the Indian indices, how they behaved on Thursday. So VIX went down tremendously that day, which was good. The other indices were kind of weak because of course Nifty closed down that particular day. So small cap and mid caps again were lower. So this is a peculiar pattern that we are seeing, that even though the markets might not fall that much, so let's say Nifty kind of closed at minus 0.33, but small and mid caps are falling 2x of that every day, and that is where the huge difference is coming in, wherein small and mid caps are actually falling. Now they have fallen almost 2x of Nifty. So Nifty is down about 14% from the top, whereas small cap is down about 23, 24. It had gone to almost 26% from the top. So it was almost 2x. Now if Nifty even stays in the zone, and if the valuation of small cap has to correct, then we can look at small cap going down further, and that is getting shown in the weakness. There is no buying in small names, momentum names, alpha names. It is just one way down street over here. Now let's see what happened in the US markets, which is an interesting thing. Now this is what happened on Friday. So Dow Jones closed up 1.65%, S&P closed 2% up, Nasdaq closed 2.5% up. Okay, Nasdaq 100, which is the one that we track. And if you look at in terms of the active stocks, so all the magnificent seven like Nvidia, Apple, Amazon, etc., they all rallied hard. So Nvidia rallied about 5%, Apple almost 2%, and Microsoft almost 2.5%. And in terms of the top gainers also, you see Nvidia, American Express, JP Morgan, all these were the top gainers. So American markets closed very well, and because of that, what has happened is that if you look at the global markets, they all went up. So as you can see, all these three are American markets. The European markets were up, which almost up 1.5%. GIFT Nifty indicated a up as well. Now a lot of it is being attributed to what happened on the ceasefire news between Russia and Ukraine. That is one, definitely. A lot of it is being attributed to the way tariffs are getting played out. So a lot of tariffs are getting rolled back, and April 2nd is going to be a key date when the US tariffs are going to kick in for most of the countries. Now, what US is saying is that they're going to impose reciprocal tariffs on a host of countries, which basically means that if a country is imposing, let's say, 50% tariff on US goods, so US is going to impose that 50% tariff over there. I'm not sure whether this is going to work out very well, either for US or for the other countries, but this is how tariffs are being used. I think it's a bargaining tool as well with other countries, because if like we have seen in the case of a lot of countries, they succumb to pressures of tariff, and with US being the biggest consumer in the world, wherein most of the exports, most of the countries are exporting to US. If a tariff is imposed, then of course their exports will suffer. So everyone will try to get a deal which is good for their country and try to be on the right side of US. And I support that, support that approach, because you ultimately are dealing with US, which is the biggest consumer in the world. So you have to be on the right side. But having said that, tariffs will cause some issue in terms of. So there was an estimate that in India it's going to be about 0.2% of the GDP if the reciprocal tariffs kick in. Impact, which is not much if you ask me, but I think the major worry for our country would be the software exports. So if tariffs are not imposed over there, or restrictions are not imposed on the visa, etc., then it's fine. Otherwise, India will the major exports from India would be your software, pharma, etc. So those are the things that we need to watch out for. And we're already seeing that there is news of Tesla coming in, Starlink coming in, which is fine. I think this is absolutely, this is good for the consumers per se, if all these things are coming in, because the technology the Starlink brings, there is no one in the world that can bring that kind of technology. So it's good. So some good things also do happen as a result, but tariffs, if you ask me, they're going to play out very, very differently from the way a lot of people are expecting them to play out. For example, there was a talk of 50% tariff on Canada steel and aluminium, which was rolled back. But if those kind of tariffs come in, then it's going to create a lot of issues in the supply chains and a lot of opportunities as well, I would say. So let's see how things play out. But the US markets were up, and they kind of took all the other world markets along with them, and as I said, our gift Nifty is indicating a green start, which is good for us. And you can see over here 22,554, up 136 points. Now let us see how the world Qs are stacked up. So US 10-year is at 4.38, which is good, 318, which is good. And Bitcoin is at 84,000. Now this Bitcoin business I don't understand, so I will not comment on it, but this if things go south, then this will be the first one to crash. US dollar index is at 103.72, which is good. It's going down. Oil is at 70, which is good. And our currency strengthened a bit to 86.94, which is good as well. Gold was the big talking point over the last couple of days, wherein gold made an all-time high. As you can see, it crossed 3,000 for the first time, 3,000 spot to the dollar. And this is the first time in history that gold has, so you can see the chart over here, how I'll take you, this is the, as you can see, this is the 1 year chart. Now you just see the movement of gold. 1 year back it was somewhere around 2,100. And in 1 year it has given almost 50% kind of return. It has gone to 3,000. Now if I take out the 5-year chart of gold, let's look at the 5-year chart of gold. This is the COVID time. It was at 1680. It did nothing basically. It went up to 2,000. That was a big news, when it went to 2,000 in July of 20. But then it came back to 1,600 in 22. So it was not doing anything over here. But in the last 3 years, it has just taken off. And this probably is the same time when that Russia reserves were confiscated and so on and so forth. And this led to huge, as they say, a huge demand from the central banks to pick up gold, and possibly we are seeing that. So it's not stopping, it's just not stopping. Having said that, 50% is too high a rally that has happened in gold, and I've always maintained that gold should be at least 10% of your portfolio. Now a lot of studies which show that what is the ideal ratio if you have a Nifty and a gold portfolio. They peg the ratio as high as 30%, 35%, the best combination of Nifty and gold. that is in my opinion a bit too high, because gold also will have a lot of time when it does nothing. I remember in 2015 no one was willing to buy gold. Sovereign gold bonds were available at huge discount. No one was willing to touch them. It was a very painful period for gold. And it lasted till 2020, and you have seen what happened in 2020 also. From 2020 to 22 it did nothing. So gold will have very long periods where it will do nothing. So having an allocation as high as 35% might be okay on Excel sheet, where it shows that is the best optimum combination. But in my opinion, 10 to 15% of gold should be good enough, because you are taking it as a hedge, and you're taking it because it has a negative correlation with equities, and it does well when stock markets are down. Like right now, it is making all-time high while stock markets are down 15-20%. So that is the role of gold, and that is why it should be there in your portfolio. And in terms of returns in INR, it also protects you against the currency drop, because it is pegged in US dollars. If the US dollar strengthens, then gold also strengthens in INR. So that is another fantastic thing. So 9 to 11% is what you can expect in gold as a long-term return, but Nifty itself is giving you 11%. So that is why it is not bad per se, having something which is negative correlated to the markets. Now let's come to what else do we have for the day. I think that's about it in terms of the markets. I'm not getting into the individual stocks, etc., which did well on Thursday, because that expiry is done. But going ahead into next week, Monday morning should hold some promise. Otherwise, the market is terribly weak right now, if you ask me. Though we have tried to claw back a lot in the last few days, but if you look at the advanced declines, you look at the weekly closings, having 5 continuous negative weekly closings, 6 months of negative closing in the Nifty. So we are in a very, very weak spot right now, if you ask me. But these small positives we can take, and if the markets do rally on Monday, then possibly we might turn a corner, because March also has a lot of pressures in terms of people paying off their advanced taxes, booking their profits, LTCG gain booking, etc. So there are a lot of forces at play in March. Now, once those things are settled out, then can we look at a sustained rally? Maybe, if things turn around, because there are a lot of good factors that have happened in the Indian economy also. RBI has injected a lot of liquidity. There is a incentive that was announced in the budget for consumption in terms of tax cuts. So there is a lot of positives also. Inflation has come down. Right, so that was another positive. Inflation has come down both in US and in India. So RBI now has a room to cut further rates. So all these positives are also there. But having said that, valuations at the end of the day are still expensive, at least in the small and mid caps. So my expectation would be, don't expect too much from these particular sectors. Nifty is at a decent level right now, if you ask me. So over there, people can still look at what they want to do, whether it's a good time to invest. In fact, any time is a good time to invest, as I have said before. And I have been buying all this while, whenever the market has been correcting, and that is what I've been recommending to my clients as well. So just for the knowledge of people who don't know, I also advise people on mutual fund portfolio, how to build a mutual fund portfolio. I construct a mutual fund portfolio for my clients. I help them do that. And we try to build a portfolio based on factors, based on market cap weighted indices, and we try to minimize risk and maximize returns. So if anyone is interested in knowing how to build this portfolio, and whether to get their portfolios checked, whether their portfolios are optimum or not, and what changes can they make, and if we can work together on that. But there is a Google form that you can fill, which is there in the description box. If once you fill that, I will contact you, and then we will take it from there. So it's a good time to start building your portfolios through SIP. SIP is the best tool for retail investors. So if you do that, you are definitely bound to get 1 or 2% extra, because simply of the fact that we are down 15-20%. So if you even, let's say, look at Nifty's average is 11%, and if you start building your portfolio when Nifty is down 20%, you straight away get couple of points advantage, right? Because the long term, if you assume that the long term returns are going to be similar at 11%, then if you are investing at 20% down, then you are definitely getting an advantage of 1 or 2% CAGR over a long period of time. So it's a good time to start investing, because there is no point to start investing when the markets are making all-time high, or when it is like a September 24 situation, when the valuations are completely out of whack. When 20-25% correction has there, it's a good time to invest. So That is my advice and 2 cents on it. So that's it from me now. I hope all of you had a good Holi and had a good weekend. And I shall see you on Monday with another update. If you like my content, please do subscribe to my channel. Please share this content with your friends. I try to bring in my insights about the markets, derivatives, and how I see the markets going ahead into next week. And I do this almost on a daily basis. So that's it from me now. If you like my content, please do like, share, subscribe, and I shall see you soon with another update on Monday. Take care. Bye bye.